And I'm Jennifer Fox, and we're so glad that you're jumping on this call today to have this chat with us.
Yeah.
It's a nice opportunity to have a conversation, share some information with you, and then after sharing that information, there'll be an opportunity for you to ask questions. And those of you who are familiar with how to use this technology, you can go into the chat, ask any questions that you might have, and we will try to answer them during the time that we're all on together today. And also want to just extend to those of you jumping on that this is an opportunity for us to share some general information, but you may have some very specific things that you'd like to chat with us about and really about your property in particular. And I know that your property managers are working with you and looking at if you have a vacancy right now, I'm sure you're in active conversations with your property manager. If you don't have a vacancy right now, that's fabulous. And you're just curious about what's going on, and we're love to be sharing that information with you. We have used lots of different sources to come up with some of the data, and a lot of what we're going to discuss today is going to be more trends that we're seeing. As the statistics change all the time, we're looking at what are the trends that are affecting our clients? What are the trends that are affecting vacancy rate? We've been in this business for 23 years, and we've seen things change through the years. I mean, there's always change happening, and there's corrections, and there's incredible growth, and there's some contraction. And we've watched it happen over and over and over again. But we are in a moment that's really important to be evaluating and watching and talking about. And I just want to make sure that you know that the opportunity to discuss these topics with us directly about your property specifically are available. So if that does come up for you and you want to reach out, please do that. But we hopefully, if I don't know if it's time to get started.
Yeah, I think I just saw four more people come in. So we'll officially get started in another minute or two. Just let the rest of the people jump on. But I think we will get going. So we'll reintroduce ourselves for those of you who just logged in. My name is Caleb Dickinson. I'm one of the owners of Fox Property Management with my sister, Jennifer Fox, who started it 23 years ago. And we're doing this webinar, this conversation, just to kind of, get some of the information out to our owners and making sure that you guys know what we know. So we're really excited to be talking to everybody today.
Yeah. So this conversation has been, we're doing this today because this is a really difficult time for a lot of people who are seeing vacancy. And there are several different forces that are putting some stress on our market right now. So we're going to go through some slides, kind of go through some data, look at some trends, and then create an opportunity for questions. So let's get that started.
So I'm sharing the slide deck. Hopefully you can see that. You can go side by side view if you want to see us and the slides, or just check out the slides. But we'll definitely be talking about the things that we'll be looking on the slides. So take a sec just to make sure your settings are where they are. But here we are. Welcome, September 17th,
Mhm.
2025.
All right.
All right.
Great. So this topic is about navigating our market. And so although we have pages worth of sources that we'll share with you on where you can find a lot of this information, we're really looking more specifically at the trends that are impacting the rental market right now. And certainly the sales market plays into it as well, but really our focus as a property management company is on the rental side of the market. I pulled this data because I just think it's important to look at this. And this will come a little bit later in our conversation as well. But if you just go and do a quick Zillow search, which by the way is where 95% of the rental interest comes from. If you go onto Zillow right now, you can see that huge number of rentals available in Boulder. And you'll notice that a large majority of them are condos or attached dwellings. So all I did was click the condos and apartments, not townhomes. So those are not included, but it just shows you the the great amount of properties available and also the type of properties available. And you're seeing that in Longmont, you're seeing that in Broomfield. Erie, interestingly, has very few properties for rent, and they have less attached and they have more single family homes and townhomes. And so kind of different market there. But you see in Denver is where you really see what's happening. And there's a huge story around Denver, and many of you don't have property in Denver, but it still impacts generally a part of the story, which is there's so many new units brought to the market over the last 3 years that of the 15,000 plus properties available, 14,000 plus are condos
Yep.
in high-rise buildings. So that is really changing the way that the market is presenting. So construction oversupply is a big part of this. So we work with some institutional investors they started planning the building that they were going to do 4 or 5 years ago. And 4 or 5 years ago, what was happening in our market was dramatically different. And so when they start buying the land and planning and permitting and raising the money, that was many, many years ago. And they also built their models on a rental price that was what you were seeing in the market at that time. And they also built in 2 to 3% increases over time. So a lot of the building that happened was planned years ago when we were seeing a certain trajectory in the market. And so all of these properties have started to make it to the rental market over the last couple of years, and it's really saturated our market. And it's been very difficult on the builders, but these institutional builders have a lot of tools and a lot of ways to manage vacancy and to lease up their properties. And it is impacting the individual condo, townhome, single family home experience because we're basically being forced into a different type of marketing because we're competing with these large complexes that are trying to lease up their properties. The second thing that's really an interesting, we've seen this happen before. This is not the first time that we've seen a weaker sales market impact our rental market, but there's a phrase out there right now called the accidental landlord. And the accidental landlord, we work with a lot of accidental landlords, and honestly, some of you might be. So, for example, maybe you have a family member who has moved into assisted living, and so you're managing their house and you put it on the rental market. That would make you an accidental landlord. You didn't intend to be a landlord, but here you are. And so you're learning about the market, you're working with us, and that's great. The accidental landlord phrase that's coming up quite a bit right now is the person who owns a single family home, condo, townhome that they were living in, or maybe even investing at for a short term, meant to sell it. And it's been on the market and they're trying to sell it, but they can't. And they can't make the numbers work. And so they are putting their property on the market. So as you can imagine in the sales market, it's got a cycle. And as we start to move into fall, we're getting more and more properties that are coming back onto the rental market. So some of those are in our portfolio, some of those are in our other property management portfolios, but a lot of those are people who bought a house. They lived in it for 5 years. They've relocated to another state. They want to keep that property because they plan to come back, or they're going to sell it. And so if they go to sell that property and they can't sell it, they're now stuck with a property they need to rent because they no longer live in the state. They bought a new property and they become this accidental landlord. And what's really interesting is oftentimes they didn't buy this property with the thought in mind, will rent cover my mortgage? That's not how they bought the property. They bought the property to live in it. It was a neighborhood they wanted to be in. So now they find they've got a certain expense associated with this property. They want to go on the rental market, and the rental market doesn't support the expense that they need to cover. And so what's happening is not only are we getting an influx of properties on the market, but we are also getting an influx of properties on the market that are maybe starting at a price that's too high. And it is influencing the way that we look at the market because we see all these properties coming on and they're marketed at a certain price point. And if you go online and you say, well, gosh, I'm in a neighborhood with 10 properties and all these properties are listed at 3,200 or higher, the problem is none of them are renting at 3,200 or higher. And so even though you're perfectly positioned in there based on the finishes and the location and all the things that are great about your property, you're competing with a lot of other properties that also believe that the market should rent their house at 3,200, but the market's not choosing to. And so it's causing a lot of disruption
Yeah.
in the market. And then the third thing that's really, people just don't talk much about it. And honestly, until we really started doing this research, I didn't realize how much the population is changing. We were getting a huge increase in population and it has decreased dramatically. It's decreased because our housing costs are high and just expenses in general high. And so we're just seeing a correction there. And so when all of this construction was happening years ago and this building planning was in place, people were looking at this population growth that was happening and they weren't able to predict this change. So in this just last year, 40,000 less people moved in. And that's a huge impact because most people move into a state, they rent for a while, and then they look to buy.
Yep.
And so that is really impacting us.
Oh, it didn't move forward. Let's see. Here we go.
So this is just a quick slide on population migration trends. And again, we do have some data. We do have some notes at the bottom and links to some of this, but basically just general population changes because it is really actually one of the main things impacting our market right now.
Yeah, having fewer young people move into the state is also affects the rental market. So, when the population's getting older, population's, not growing the same rate, we're just not, again, this is our version of supply, right? So or I should say demand, there's not enough demand coming in for the properties that we have. So if you want to kind of finish with the sales market piece.
Yeah, so the way the sales market is impacting us right now is that well, there's a couple things. So the sales market is slow and sluggish, and interest rates. I just put in that 6.15 to 6.39 was a number I just got today. So I know there's been a little bit of adjustments. We're expecting maybe a little bit more adjustment. Interest rates have been high enough that they've really kept people from buying property. Now, those of you who are investors, I've talked to lots of you, and you haven't been able to make the numbers work. Even if you wanted to buy an investment property and leverage it, you haven't been able to make the numbers work to buy an investment property and rent it. And we're finding that with even people buying their first homes, second homes, the mortgage rates are high enough that it is changing the buying habit. And so what's happening is, I'll give you an example. I had an owner who took a couple properties off the market, put them on the sales market, and throughout the summer just weren't able to sell them, and they've had to put them back on the rental market. We've also had a handful of people who are trying to sell their single family primary residence, haven't been able to. And it's just too dramatic of a drop. And even dropping hasn't helped. So even though they've dropped their sale price quite a bit, it still isn't getting the sale done. So they're going back on the rental market. So the sales market's impacting us because there's a couple things. One is, one point of data is, well, less people are buying property. That means there's more renters. Well, that is somewhat true, right? I mean, there's some truth there, but we're still, this sales market sluggishness is not removing enough properties off the market, and they're getting back onto the rental market. So we're seeing more of a supply issue. Demand is really not hugely impacted by this.
So, we're gonna get onto some examples, but we do want to talk about some of the increases in rental rates since 2020, between COVID and people working from home more and population increases, and natural disasters like the Marshall Fire and other things. There was a scarcity of rental properties and rents jumped enormously. And so that's one thing to keep in mind is that, if you look back at 2020 and then you fast forward to 2025, a lot of the current, rental prices we're seeing are fantastic if you compare those two numbers. But, when you had a spike in, let's say, 22, 23, 24, and you're getting higher rates than we normally expect, it's tough to come back down. And we're seeing rental rates kind of returning to 2022 levels, which can be really frustrating in the moment. We're going to walk through, a few of those. And then we just want to, mention, we'll get to some of this later, but that these other costs are going up for a lot of you. So maintenance, insurance, and HOA fees being a lot of it in property taxes as well. So I want to talk about both ends of the spectrum, the rental income you're getting in and the expenses that are going out. So we're going to do just a few case studies. These are real actual properties that we manage. We've removed some information, but we want you to see a real property here. So as I walk you through this first graph, the green line is the principal and interest being paid on a mortgage. So this is a real property that we happen to have this information for, and the principal and interest haven't changed. So again, as you all know, a mortgage has the principal, the interest, and then often the escrow. And although the amount you're paying to principal and the amount you're paying to interest change each month, they equal the same thing, unless you're on an adjustable rate mortgage, which most people aren't, some sort of fixed mortgage. So that should go pretty much unchanged. That's the green line. And one of the biggest expenses you have on your property likely is your principal and interest on your mortgage. The red line is supposed to be a nice, smooth 3% increase of rental rates over time. And you can see how far the red line moves from the green line over time with a healthy property just having a 3% increase every year. In this case, the blue line is what the rent actually has been. And so you can see, back at the start, the rent just was not raised for a few years. The landlord decided to renew with no increases and then a small increase. And then when the tenant moved out, there was a correction to the market and there was a huge increase with the new tenant. And then no raise, and then an increase, and no raise, and an increase. And it's been going really well. And you see this spike here of when it was at its best moment, if you will. And to have a flat year has been normal. You'll see that this owner has chosen to raise the rent, not raise it, not raise it. So this is another flat year. That's fine. But the idea of coming down can be really painful. And that's something that a lot of people are frustrated with right now is I shouldn't have to lower my rent. It should be kind of going up every year. But you can see that these actually meet remarkably similar spots. And so if your rent was just going up 3% per year, we've kind of hit that goal. But this is a frustrating moment because we're having to lower our rent rate to get to that red line. And it's nice being above it. It is. It's nice doing better than 3% per year. But this is just one classic example. Another one, a little more exaggerated. This one really separated quickly and it's been doing really well. It's a shorter time period, but having to correct down substantially in 2025 to get renters. But it is pretty similar to that red line still. This one's a little below, so it isn't quite doing that same thing. But if you remember, our principal and interest is staying pretty still. So we'll talk about some of the other things, maintenance and HOA later, but the big cost. So this is another real property that we manage, and you can see this sort of rainbow arc of what rental rates are doing. And just again, owning that this last moment here from 24 rate to 25 rate was really hard for this owner to stomach, but it's maybe okay long term as long as the direction doesn't continue, right? We want to see, this is a correction and then increases over time. So third one, this one was just kind of interesting to me because it was really following closely along this 3%. This owner was probably getting the advice from the property manager. 3%, is reasonable. So the rent was basically being raised by 3% every year. And then we had a sort of a market correction where, whoa, I can get a lot more money. That's amazing. And we had a big increase. That is awesome. And everyone was really happy about that. And that's another reason this is the moment where we got a lot more rentals because people were looking at this and saying, "Oh my goodness, I want to rent my place out. I see what my neighbor's getting. I see these new rental
Mhm.
rates." And so you had people who turned their home into a rental home or bought someone's, home and turned that into a rental home. And so a lot of people wanted to join the market and it saturated it. And so this one is correcting pretty severely, like, a $500 correction potentially to get someone in there, but it's still way above where you would have expected this property to be over time. So, starting to beat a dead horse here, but what I want to switch to is again, this is a property, 2740 86th Street, and looking at cost increases. So if you see the principal and interest being $1,000 a month, it doesn't increase. But insurance and property taxes might go up 20%. And that's really frustrating to see these big increases. But if you put it all together with principal and interest not going up and insurance and property taxes going up by 20%, the total cost has only gone up by 3%. So just keeping that in mind, this is the full mortgage instead of the principal and interest. And sometimes we can kind of get frustrated with those large percentages. Of increases on the small dollar amounts, right? And so, but when we're getting no increase on the big dollar amount of principal and interest, that's what's kind of helping us ride the tide. That's what makes long-term investments like property, owning a property really successful because that big expense kind of stays consistent while the rent tends to increase. So just a reminder at some of those costs work for us. And so if you want to, Jen.
Yeah, I mean, I'm jumping back into this vacancy. The vacancy is just really surprisingly high. It's the conversation is out there because there's just so much available. And it goes back to that first slide on Zillow that just shows how much is out there. And, I don't know if you've got a condo or a townhome or a single family home. It's definitely the bigger issue is with the condos and apartment type of properties. That's where the most of our supply is. And one of the things that we're seeing in the market is this, that's a major indicator. It's really showed up in the last year is that these large complexes are offering concessions, 1, 2 months free rent. They've got amenities, they have all these things, available. And so they're really starting to drive, the price down for people because you can amortize it over time. So it either drives it down by showing an amortized cost in the marketing, or someone can walk into one of these complexes and look at all their different options and get these great deals because they're trying to fill their occupancy. And so what's ending up happening is we're starting to look at, well, is this something we can also do? So if you've got one condo or one house, can we look at offering some concessions as well. Is this something that we can do to sort of equal the playing field a little bit here? And the other thing that's happening is landlords are dropping price, right? So they're either doing the concession, dropping price, and then we're starting to then we need to start having some other conversations because it can be really frustrating if the only answer to the problem of your vacancy is keep dropping the price. I mean, that's very frustrating. So one of the conversations we want to be having is what can we put together strategically to give your property the best chance of renting? So look at how does it position in the neighborhood it's in? Where is the price compared to others? If the next renter comes in, are they going to choose your property or the neighbors? Are we positioning you with the right price so that the price discussion is thoughtful? It's not just rote, but it's thoughtful. It's like, how are we competing? And you, on the other hand, we don't actually know, for most of you, we don't know what your mortgage is, what your interest is. We don't know a lot of the details in the background of the financial impact of this property on you. And so we're also operating from just looking at how do we get it rented for you. And so having that collaborative conversation where we can understand where you're coming from, understand your long-term plans for the property, understand where the pain points are and the stressors are, is really helpful in us coming up with a strategy to help get your property rented if it's not renting. Let's see so in a, summary, we're looking at a supply demand issue, right? That's basically what's happening. We've got too many properties, not enough people looking. And I will tell you that inside the supply and demand, Fox Property Management, for example, I think today when I checked had 77 properties on the market for rent, which is high for September. And one of the things that I'm very aware of is that come October, there may be another influx of properties that come back on the market that didn't sell that will continue to put more property out there for people to rent. And those people who are coming on that market, they kind of need to stay in the market for a while. You can't take a property off the sales market, put it on the rental market, and expect a 4-month lease necessarily. So they may end up on the market for a year and a half or longer. And so we're going to see some more supply of properties onto the market. So what we want to be talking about with you and strategizing with you is how do we position your property as soon as possible to get rented so that
Yeah.
we're not in October and in November.
Yeah, and I think that's a big thing, right? Is like there are a lot of things we can do to entice someone to rent your home. Good marketing, good descriptions, good pictures, a good showing explaining the amenities and the reasons to live there. So there are lots of pieces that we can do. Price is huge. Flexibility from the owner can be huge. Flexible lease terms. Accepting pets is always a big one. Figuring out ways to help people pick your place. It isn't just the rental price. A lot of it is even our reputation as Fox as being a nice place for a tenant to live. So we're trying to combine all those things. But one of our concerns and one of the things we're trying to really make sure our property managers are hearing who are working with you and that you're educated at the same time is if if we need to drop your property $200 in September to get rented, that's frustrating and that's tough. If we get it rented, at least it's rented. If we wait till October, we may have to drop it more than that, right? And so we, one, didn't rent it, and two, we have to drop it even more because if more homes come off the sales market and enter this market and everyone's needing to get people in for the winter, we just want to be ahead of that. And that's why we're doing the webinar now. That's why we sent out the letters that, we really want to try to get anything that's vacant right now rented before October 1st so that we have the best chance of not having to, do more and more and more creative things. Because in the end, you can't have your property. I know I wouldn't be able to have a property go vacant for the entire winter. That is really going to be tough. And at some point, you'll have to make a dramatic decision to get it rented, and you don't want to be trying to do that in December. So we're still in September. This is still a really good time, but we really want to make aggressive moves this month. And again, it doesn't have to just be rent, but aggressively changing the way, the way you're willing to get someone in your home. And certainly the easiest, most obvious one is if you happen to not allow pets. A lot of people have pets, and so that's a way you can. That's one example of a way you can open stuff up. But we're looking for all these.
Yeah, and I would say too, I think that we're being creative, on pricing the way we show pricing, concessions, making sure that the marketing is good. responding quickly, getting showings done throughout the week, and making those available for people so that we're not missing anybody. The other thing too is depending on the property you have, one of the things you're competing with is newer properties. So if you have a property that's outdated, or maybe curb appeal isn't great, or hasn't had a fresh coat of paint for a while, or you've got that one bathroom in there that is, you're probably getting some feedback. And this might be an opportunity to consider, is this the right time to make some improvements? And also talk to your tax advisor on, are there some improvements that are good to make, that are actually going to be, good for me from a tax perspective. Again, we don't have the information to really know everybody's financial situation. So we're really operating with limited information. We just know our goal is to find great tenants for your property and maintain it and manage it over time. And that's our goal. And so we just want to be in those conversations of what are all the different things that you can do that are going to help you be successful in getting this property rented. And understanding that everybody's in a different position to do that. And are there things you can do? Can you take out a line of credit on your single family home to put some money into your investment property? Or is that not a great plan for you? So there's so many different things you can do if that's needed.
And certainly this conversation isn't meant to solve everybody's problems, right? As Jen said at the very beginning, each one of you has an individual story, right? So you might have one property, it might be vacant or occupied. You might have 10 properties. And everyone's going to have different needs and different means to solve some of these problems. So this is meant to be general. And then if you have specific questions, obviously starting with your property manager, but knowing that you have us and others in our company that are available to really think these things through and try to get you, to the side, because this is must be your largest investment is this home, right? And so, it is such an important investment, and it is a pathway to retirement or inheritance or comfortable living that is it's so valuable to you. And so, how do we get through these tough times and have this be that 10, 20, 30-year investment that really pays off in the end, and that we can all deal with these rough moments in between?
Okay, so I'm guessing there's questions.
Yeah, what maybe speaking to cash flow, is there a reasonable ROI for a rental property now, month over month, long term? And can you speak to maybe planning for variable costs that might come up as well for a property?
Yeah, so rental properties are interesting because I think some people really look at them as from a cash flow perspective. I'm renting it for 2,000 and I'm paying out 1,800. It's cash flow positive 200, and so the return is that $200 each month. But what's so important about these properties, right, is if you were cash flow zero and your rent perfectly matched all of your expenses, a miracle, exactly zero every year, that can feel like I'm not making any money. But two things are happening at the same time, and those are hard to calculate. One's easy to calculate. Your principal balance is going down on your loan, right? So the renter is paying off your loan. That's your money. It's money you owe someone that you no longer owe them when this mortgage is over. So if your house is worth $500,000 today and it's still worth $500,000 20 years from now, but you no longer have a mortgage, that is the real return on investment. And then add to that actual appreciation that the home isn't still worth 500, it's worth 600, 700, 800, a million 20 years later. And so you both get the appreciation of the value of the property going up, but then your debt has been paid off. And so even if you didn't get a penny of cash flow return in that entire 20 years, you went from zero to a million or 500 to a million. I mean, probably $100,000 investment in a $500,000 home to $1 million value. So that is an incredible retirement program. At the end of that, you have no mortgage. All the rent can be kind of retirement income, or you can sell the property and take, your tax hit there, and then that's your retirement fund, right? And so, generally speaking, anything between 5 and 10% is a good rate of return on an investment. Some investments are riskier than others. Uh, Homes, real estate is not a very risky investment. So, generally speaking, it has not been a very risky investment. So to have over time, a 5, 7, 8% return on your original investment, which is the down payment that you pay, that's the investment, right? Not the price of the home. The down payment that you put forward was your investment. And to get that return over time is usually quite good, especially in Colorado in this market. So even in these little lulls, where maybe the value of your house isn't going up and the rental rate isn't going up, and this is a tough moment over that 20, 30-year plan. This is really, really good. And so to the most frustrating moments of like when we're cash flow negative and I'm getting a email from Fox saying that we need a $200 contribution, we need a $200 contribution, we need a $200 contribution. That can be really frustrating that it is costing you money to have this home. But if you think about the other ways in which you might invest $200 a month into a retirement plan, to get that $1 million when you're done. That's how that should feel. It's not the best case scenario. It's great when we're paying you $200 a month. Every month you're getting cash flow and all that appreciation. It's okay when it's cash flow neutral, and it kind of hurts when it's cash flow negative, but it's still very likely a good return on your investment to be putting that small amount in each month or every 6 months or whatever it is, that you're still in a really good investment. And the tough thing with the sales market is you're like, yeah, I just don't, I'm just going to sell it. It's a tough sales market, and this is not a great time to get rid of your investment, in our opinion. So there's a little bit of a feeling there of like, well, I'm kind of stuck. How do I get through this? And that's what we're here for. We're here to help you get through this and see some of those bigger picture items. So I hope that's a good answer. Not a lot of specific numbers.
Work with my property manager to view my cash flow specifically right now and historically its performance, whether it was with Fox or somewhere else previously.
Yeah, absolutely. And if the property manager is working with you on that and you guys are stuck in any way, this is something that Caleb can help with too. It can model it out, help you look at it, help you plan and strategize. For some people, they like to put 10% aside for future, maintenance issues. For other people, they're, you know, some of you guys own your properties outright cash. You're paying property taxes. You might be paying an HOA. I do have one investor. I actually think they might be on this call that owns all their properties outright cash, and their goal always was to make sure they were at least making 5% on their cash. That was their intention every time we were setting prices and making decisions. So I think everybody's got a different objective there, but yeah, I appreciate what you said, and we're happy to help model that out for you.
On the marketing side, we had good suggestions, and maybe just speak to it. That, and I think Caleb, you kind of mentioned it earlier, to put in our ads that it's locally owned, locally managed, rather than some of these larger businesses and institutions that we're seeing on the radio and all around.
That's really interesting. I think, what we know is that when people search for property, what they search is they search for certain things. They search for price. They can put in a range. They search for the number of bedrooms, bathrooms. They might search for whether pets are allowed or not. And they are going to probably search, search for location, right? And once they have found something that meets that criteria, then they start reading into the description and all those other things. So we do, if we can capture them with the other parts of your property that are fit for them, so price and location and size, then we want to make sure that the message we're giving them draws them in, for sure. Just like we want the pictures to be good, we want the experience to be good. And I like that idea. And I think that getting creative with your property manager on the description. I've actually worked with people who they kind of want to be part of writing their description, or they have a suggestion for something. And that is a very easy thing for us to add. And I like that idea because I think for some people, they really do appreciate who they're working with. Some people only want to work with a management company, but they don't want to live in a big building. Some people will not rent if it is going to be a landlord that is on their own because they don't trust the landlord to follow those rules. So I think that's a really great suggestion. Yeah,
Well,
thank you for that.
And we're definitely trying to use our reputation to your benefit, our benefit as well, of course, but that, we're a property management company that actually gets positive reviews and comments from our tenants, right? Because we do care about your tenants so much. And so that's helpful too when a tenant is looking for any difference between this place or that place, a reputable property management company that they can look up and see, mostly keeps their tenants happy when tenants are often unhappy with the landlord. That's a positive thing too. So that we're locally owned, that Jen and I have been doing this for a long time, and that we have a good reputation in this community is a benefit to all of you, and certainly why one of the reasons we want to keep that reputation up.
Yeah, so thanks for that suggestion.
Any specific improvements that you could suggest or would suggest for in general improvement performance of the property overall or at a vacancy period?
Okay. So, the first thing, right, is curb appeal. Now, if you're in a condo or townhome, it's a little harder to control that. right? Most of the time that's controlled by the HOA. If you're a single family home, curb appeal is a big deal. How does it look when people walk up? So if your house hasn't had an exterior paint in a really long time, that could be a really good time to do that. If it's got a fence falling down, it could be a good time to fix that. So curb appeal is a big deal, especially with a single family home. And exterior paint is surprising. One of the things it's not that expensive, exterior paint comparatively. And one of the things that I think is super valuable is to at least do the research to get the estimates to see what you're working with. Then once you enter the house, a fresh coat of paint always makes a big difference. It's very, very standard if you're going to sell a house that you do a fresh coat of paint because it changes the experience of the person walking in. So depending on if you haven't had paint 3, 4, 5 years, that could be something that's worth doing. The other thing that makes a huge difference in property is flooring. So if your property is all carpet and it's worn, that might be an opportunity to go to an LVP or some other product that is a little bit more modern. And then bathrooms and kitchens. Those are the other things. So if you've got a primary bathroom in your house that's really dated and you know there's some opportunity there and you like to put some money into that, that could be worth it. Kitchens would be another place because basically people have this experience when they walk in, they're living in your house and it becomes their home. And there's certain things, a person paying the rent uses that bathroom every day, uses that kitchen every day. So those can be good investments. And then there's other small things. If you've just got light fixtures that are not creating enough light in your house and you could update all of those, that's not a very expensive thing. So there's a lot of different options and different price points.
How long do you think the impact, or how do you think the impact of the length of time a property is a rental will affect its ability to sell?
Well, that's really interesting because we see a lot of that. We've got people who have rented their properties for 10, 15 years, and then they put it on the market to sell. And actually, it ends up being that after it's been a rental for a long time, there's a lot of opportunities to freshen it up. But what I have noticed when we take on a property and we transition it from a rental to a sale is that flooring is always important, paint's always important, and then some of the other things we're talking about might be remodeling one kitchen or a kitchen, or it might be a bathroom or two that are getting fixed up. But what I would tell you is that these homes, they really wear well over time. They just have a normal wear and tear over time. And so if they're rented for 5, 10 years, they're just going to need to be refreshed. And we see the transition of rental to a sale go very, very well. And we have resources to help with that. So we're able to usually do that transition very quickly as well. So,
Well, and,
yeah,
and
yeah.
I think the reason why a house being a rental for a long period of time can really diminish its value is if it's not taken care of, right? So if you don't care about the house because there are just some tenants living in it and we never replace the carpet, we never paint, and we don't do any landscaping, and we don't do preventative maintenance, and we really treat the property like crap for 10 years, 15 years, yes, that is going to be a really rough home. And likely the tenant won't be taking care of it very well if the owner and management company aren't taking care of that property with them, right? So it becomes, both things happen at the same time. The owner doesn't care about it, the tenant doesn't care about it, and it just goes down and down and down. And so that is absolutely not who we are as a management company, and it's not what we encourage our owners to do as owners of properties. So I think in our case, we don't see the diminishing value as much because the place is getting a nice, fresh, new carpet, and we do care about the yard through the entire tenancy. And are there moments where tenants, abuse those things? Yes, of course. Are there moments where tenants treat it properly, poorly? Yes. But it doesn't happen for 10 years. They get out and we refresh it again, and we get new tenants in there that will take care of it. So I think it's really that more cyclical lack of care over time that makes a rental property less valuable. So I think it's always possible, but less possible with us.
Yeah. Yeah, so I don't know if there's any other questions or a couple things that I would say as you're looking at your particular property and your particular situation, know that we don't have that information unless we get together and talk about it and share it. So if you are, after having this conversation with us, feeling like it's generating a lot of questions for you or opportunities for conversation, or you'd like, Caleb to model out for you, okay, here's what my mortgage is, here's what I've got, where am I tracking here? What am I doing? That is something we're absolutely happy to help you look at. And your property manager can get you in touch with us or work with you directly to get that information so that we can share more information with you. But the thing we really want to stress is that we want to be in partnership with you on this. We don't want you to feel like you're out there with no solutions. We want to be a company that shows up for you in this time because it's really challenging, and we're learning all the time too. We're getting new information, and every day I go and talk to our vetting team and our leasing specialists and ask them about what's the traction we're getting, how many applications we're getting. So we're paying really close attention to the trends that we're seeing here at Fox as well. And so we want to make sure you feel like you're getting partnership, and we need to be curious about what's going on for you. We need to understand what drives you, what's behind you as an investor, what matters to you, how you see these expenditures, how you see these decreases, how you see the market, what are the questions you have. So really want to personalize it to you. And this was just a kind of a kickoff opportunity to share some of the information we have and really open it up that Caleb and I are here. We're in the office every day. We love to meet in person. We love to meet by Zoom, that you have access to us, and that your property manager does an incredible job really trying to manage all the different aspects of your property. And then there's an opportunity sometimes to have a bigger conversation that includes more brainstorming, more ideas. And we really want to be a part of that with you. So please take advantage of connecting with your property manager, continuing to work with them, and then ask us if you need to have a deeper conversation about your property. And we look forward to that, and we look forward to years of working with you, and we look forward to getting over this hump because it's really stressful for us too. We hope to have properties all rented in September and have happy owners and happy tenants, and so we're all in this together right now, and we want to make sure that you feel the support from us. So I really appreciate you getting on this call today, taking the time to do that, and we are available to you if you need us.
Yeah. And I'll just throw on the sides here. We do have the sources that some of the sources that we used, and we can send these to any or all of you if you're interested. Just send us an email if you want to see any of these sources that we were finding as well. But that is it. So thank you so much.
Thank you.
Appreciate your time.